Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is May 18th, 2022, and we are due for a silver price update, are we not? Silver has been weak recently. We want to look at the updated expectation over the intermediate term here. Now, before we go any further, because I know one of the questions that some people are going to be asking ahead of time is going to be, well, why is this happening now? Because the last time that you did a silver price update, you said that there was a better expectation for silver to go higher. And remember, it has been a month since the last update, and things changed during time. And so the follow-up question that I know a lot of people will be asking is, well, why don't you do updates more often then? Why don't you do updates on the silver price every week or even every day? Keep us all nice and up to date. And here's where I want to take a moment and just speak to you about the business model that I employ here and why this business model is different from what you will see elsewhere in this industry and why I've chosen this route. It's for a reason. Now, there are a couple different ways that businesses in the precious metals and the financial markets can go about earning revenue. One is if they sell the product. So think about the bullion dealerships. And by the way, I'm not saying there's anything wrong with what they're doing. I know a lot of the bullion dealerships personally. I know people who own and manage the dealerships, and they're all very good people. That said, if one of the bullion dealerships puts out a video or analysis for quote-unquote free that says, hey, silver is about to skyrocket, so now is a good time to buy, can you really trust that type of analysis since they're selling the metals? I mean, the analogy would be that's like if you're getting ready to buy a house, a new house. You've never seen it before, but you like how it looks from the outside. And the previous owner says, hey, now is a good time to buy. Trust me. Trust me, the person selling it to you. Don't even bother getting an inspection done. Don't even bother getting a termite report done. Trust me, the seller, because I know. Would you do that? No way. Absolutely not. People pay for independent, which is what the I stands for here in iGold, independent inspections of things that they potentially want to buy, right? When you're talking about a house. That's what people do when they're making good and big purchases. So you've got to be careful with the quote-unquote free analysis that you see on YouTube that's coming from entities that are trying to sell you the very thing that you are buying. That's the first business model that I do not do. The second one would be if I was accepting advertising. So for example, let's say I'm talking about the silver price here every day or a few times a week, and somewhere in there I say, hey, and by the way, I think you should go out and buy XYZ silver stock. Or the best dealership I know is the following one. But secretly, that mining company, that stock, or that dealership is paying me to say that. That is not what I do here. And trust me, I have mining companies that approach me. I have dealerships that approach me all the time. And they ask, hey, can we sponsor you and you put a plug in for us? And I have rejected it every single time for the last 7 years that I've been doing this. For the reason being that I want to be able to speak freely. I want to speak freely to you about what I truly see in the markets. And I'm willing to bet that there are people who value attempts at unbiased and objective analysis. As objective as is possible. We're all human beings, right? No human being is 100% objective about every single thing that they do. But at least in a best faith attempt, as opposed to allowing someone to pay you to say something, right? So that is why I do not accept advertising. I don't want you to have to say, oh, this is the part of the broadcast in which Chris is being paid to say that. So the type of model that I have chosen is the subscriber supported model. And that is because that model, that's like paying for the independent home inspection. Before you get ready to plunk down, several $100,000 for a new house, you pay for that independent research, that independent analysis. What I do here is to provide an independent source of information on the precious metals and the financial markets. And because of that, because this is independent, that is why I cannot publish everything for free. Otherwise, I wouldn't have a business. It would be like if the home inspector said, yeah, now we're doing home inspections for free. How do they make their money then, right? So then they're out of business. So that is why I do not accept advertising. I do not sell precious metals, but the trade-off is that I cannot publish everything for free. And that's why you may only see a silver price update once every few weeks, once every month or two here, because my paid subscribers are the ones that get to hear from me every single week or more often when there is market-changing behavior, such as what has happened recently. So please keep that in mind. Make sure to hit the red subscribe button and the bell icon. And make sure to follow us on Twitter at iGlobalGold if you want to continue tuning in here to the free content. And there's nothing wrong with that. Let's say if you're a long-term investor who's only interested in accumulating physical silver or gold, and you say, I don't really care what happens to the price. Well, fine. Then, if I was in the same situation as you, then I probably wouldn't pay for any analysis either. I would kind of tune it all out, basically. I wouldn't actually even watch the price very often. But I'm willing to bet that the majority of people, even though you may say I have a long-term time horizon, fine. How long is that? Is it 2 years? Is it 3 years? 5 years? 10 years? Do you intend to pass the precious metals down to your children and your grandchildren after you leave this planet? Those are questions. I'm willing to bet that most people, I do believe this is accurate, most people want the precious metals to rise in a reasonable time frame during their lives so that they can use that purchasing power and go out and do exciting things with their lives. Buy a new house, buy a new car, buy a piece of land, move to another country, start a new business, right? There's some people who truly don't care and they just intend to pass down the precious metals, to their children and grandchildren. But relatively speaking, I think most people actually do care what happens to the price. And that's why I think it is worth paying for an independent perspective at regular intervals so you can be educated. So here's our legal disclaimer, as always. As we say here, we are independent research and analysis firm, not registered financial advisors, no way. Independent thinkers and investors. I put my money where my mouth is. And make sure you understand risks and rewards. So, all this said, and I really think that's important, guys, as we bring up the silver chart here, I really think it's important because when you understand that there are these three business models in this industry, you're either selling the product or, and in which case you have that biased viewpoint of saying now is the best time to buy, or you're being paid by someone to say something, in which case your message is slanted, or you have the subscriber model once again. And that's why you can't hear from me every single week, even when things like this happen. This is what we were looking at going back a month ago. And I'm just going to say this, my premium subscribers did receive notices about this when this was happening. And we took some, not all, but we took some profits off the table in our trading positions here in silver-related equities into these peaks here. Now, when we were last talking here on the free channel, we were talking about silver breaking this primary downtrend, and it was holding for several weeks here. And we were talking about the last time this happened, way off the chart back in 2016, it needed 9 weeks. That was the operating thesis until what? Until the market showed us something otherwise. This break down, this break back below the primary trend registers this as one of those unfortunate false breakouts. Now, whether you're talking about financial analysis, market analysis, whether you're talking statistics, the entire discipline of statistics, you're always going to have what they call these false signals. In statistics, you have false positives, you have false negatives, and depending on which one is preferable, are you talking a data set for financial analysis? Are you talking, a bell curve for, health-related issues? Depending on which type of data set you're working with in statistics, either a false positive or a false negative can be worse than the other. In the case of financial analysis here, I think it's important to remember that false moves happen just like in any other system. And when you have a false move in one direction, it tends to be a precursor to a strong move in the opposite direction. So in this case, breakout upward turned out to be false here, and boom, slam back down in the other direction. Now, statistics, you want to talk about financial modeling, you want to talk about demographic modeling. When you have these outlying events, let's say you've been collecting data for a year, you're a polling company preparing for an election, and you have one of these outlying data points. Do you throw away all of the previous work that you've done because you have one false positive or one false negative? Do you throw away the previous year's worth of work because you have a data point that turns out to be false? I mean, you could do that, but good luck reinventing your model every single time, because you will have false signals in both directions from time to time in any discipline. As we talked about, statistics, demographics modeling, weather, climatology, and technical analysis of the financial markets. You will always have these false signals. So when you have a false breakout like this in what was a very clear model prior to that, what you must do is go back to the last valid pattern that still is maintained in the data. And that, in the case of silver, was this triangle that we were in from mid-2020 through October of 2021. This triangle with these lows coming up and these peaks coming down, you can see very clearly this blue shaded triangle here was the primary pattern that we were in for almost a year. Now, the breakout of this upper boundary of the triangle that extended outward formed a trend line was the negation point for the lower expectation of prices based on this breakdown from the triangle. And when you have a breakdown from a triangle, you have a fairly reliable way of projecting the amplitude of the expected move going forward, which is to take a measurement of the widest part of the triangle. Remember this, if you're not only interested in precious metals, if you are interested in being an investor and a trader for the rest of your life, because eventually, whether it's now or 5 years from now or 10 years from now, the precious metals are going to top, right? You're not going to be entirely in the precious metals for the rest of your life. I mean, not if you want to be a well-educated and diversified investor. What you want to do is say, hey, let me take these principles and apply them to other markets, because there is going to be a time for other markets. Back to silver. When we have a false signal like this, what we do in technical analysis, you go back to the last valid pattern, as I said, this triangle. You take an amplitude measurement of the triangle, $8.40, and the target projection is calculated based on taking that amplitude and subtracting it from the apex, in other words, the convergence point of this triangle before it broke down, which was right up here, as you can see, right above the 27 level. And basically what you have to do, to think about what's happening here, because this is like looking at the data. This is the chart. This would be like looking at a raw dump of statistics data. But all the data is just a plot of human behavior. And so when you're looking at a chart like this that's converging, and you're looking at this converging, what was happening here is a lot of buying and selling, all converging. And it's basically like pressing a spring together. The buyers and the sellers and the buyers and the sellers are converging, and they're building up pressure. And no one knows who's going to be correct while it's still in the pattern. Is this going to break higher? Is it going to break lower? In this case, the pattern broke lower right there where the red shading is, and you have all this pressure that's built up from this convergence. And a reliable way to calculate the target for that breakdown, as I said, is to do the amplitude 840 subtracted from the convergence of all that pressure right there at the apex. And so that gives us a target of $18.45 on silver, since this proved to be false. In retrospect, we can see that it was false. So we have the amplitude, 1845. Of course, the amplitude alone doesn't tell you when it's going to happen in time. You then have to study what are the trends, what are the patterns, and you take the amplitude measurement and you plot it where it needs to be in time. And I think on a highest probability basis, it looks like we will have a bit of a rounding out, perhaps a continued attempt at a recovery here, but it should be failing, and we should make our way back down to $18.45 on a highest probability at this exact moment in time. Now, as I said in the introduction, things change sometimes. We see an example here. In technical analysis of the financial markets, you always, when you have a target, an expected move, you always calculate ahead of time what is the level that would show me that this is wrong. What is the level that is going to tell me that this will not be achieved? And in the case of silver, I will tell you this. The first hint, the first signal that will start to show me that perhaps we're not going to move down here to 1845, but maybe this was a bit of a bottom here in a more significant kind of way. The first data point I'm going to be looking for is weekly closes above the 22 figure. 22, look at these lows in here, and I mean 22 even, 22 smack on the nose, 22, 22, 22, right in there. It's the upper boundary of what was this year and a half support that looks like it has failed right there where the orange circle is. So if we start to recover the upper boundary, which is 22 even, we're trading at 21.40 right now in the spot market, it would start to suggest that perhaps this, in fact, was a false breakdown. If that indeed proves to be the case and we get weekly closes back above 22, then I start to look at this market and say, is this going to springboard back in the other direction? In other words, did we get a false breakout up, a false break down, lower, and then are we basically off to the races after, let's say, a brief pause here at the primary trend? Now, I have both of these, and especially I want to draw your attention to this for the question of the false breakdown here. I have this in orange for a reason. Orange is for your attention. It is not a target. We do have a lower target, which is a highest probability expectation based on visible patterns and calculations from the visible patterns. This is the highest probability in green. Anything you see like this that's in orange is for your attention. It's a hypothetical at this point. We haven't seen it yet. We don't have the proof yet for it. But what I've done here is to outline what the requirements would be for us to see that. I said the first data point we would need to see weekly closes above 22. So will $18, and by the way, not only is this, this level here around 1845 is very interesting because it's not just the amplitude calculation of the original triangle that was forming here in silver. It's also quite significant black horizontal resistance, which should now act as support. Look at this, a rejection there, rejection there, rejection there, right? Going all the way back to 2019 and 2020. So it's also black horizontal support, black, and it's also, look here, right below the main chart, look at this, the 50%, not 50, but 61.8%. You can barely see it because it's behind the black line, but these lines match up exactly. This is the 61.8% Fibonacci retracement of the entire move from this low to these peaks up in here just above $30. 61.8%. Remember, these are these levels calculated by the Italian mathematician of that name when he learned and calculated that these retracement levels form in all these different patterns in nature. When you're looking at the spirals of the galaxies or the spirals of the seashells or of the waves, they follow these Fibonacci ratio patterns. And so these patterns often work out in the financial markets since the financial markets are a function of human nature and the natural world. Aha. And then I can hear it already. I can hear those of you are saying, but that doesn't apply to silver because silver is manipulated. And then I say, wait a minute. Who are these manipulators? Are they human beings? I think the answer is yes. I mean, unless you want to get really deep and go into the spiritual level on things, which I'm happy to do, but another day. For now, let's talk about them as human beings, right? These manipulators. Okay, if they're human beings, do not all human beings move in repeating patterns to some extent or another? Yes. All we're doing here is charting the sum of the human beings that are participating in the silver market, including the manipulators. The behavior of the manipulators is in this chart. It appears here. The chart is inclusive of the manipulators. Okay, hope that answers that. Highest expectation for silver as we come down to $18.45. If we get closes back above 22, this starts to look more bullish as a false breakdown, but I'm sticking with the visible evidence now, the visible pattern that has already manifested of a false breakout, and the lower support levels that exist now. If this changes, our premium subscribers are the first ones to know about it. Told you in the very beginning, You either take one of three models. You're either going to pay someone who's selling you the thing to provide you unbiased analysis. Not wise if you're buying a house, not wise if you're buying anything else for that matter. When you're buying a new car, do you get a Carfax report, an independent report? Yes, you do, if you're wise. Same thing here. If you're making a significant investment, it is good to get independent analysis and research onto your investments. Precious Metals Intelligence is the service where you receive weekly videos, 50 weeks per year, much more in depth than what you're seeing now. And you receive flash updates in real time. For example, when we noticed that false breakout and we took some profits off the table, you receive those flash updates in real time when that is happening. That is my business model, and it is why I cannot publish everything here for free every day or every week. You get all this included: gold, physical silver, US dollar, the stock market, the rest of the commodity sector, as well as research into the exact open market mining companies that we are investing in here. If you would like to try to achieve the greatest leverage in this cycle, and you are a higher net worth investor, then you must check out Elite Private Placements. Remember that in Elite Private Placements, you receive free warrants with every single investment that you are making, which gets you nearly twice the amount of upside as the open market positions. Those warrants are given to you for free when you invest in these mining companies by private placement. And typically, for every investment, the minimum is going to be $10,000 Canadian. And so that's why you must be of sufficient savings and investment level in order to participate in the private placements. But once you get to that level, it is a no-brainer to try to make additional upside compared to the open market purchases. Remember, you'll receive a free Precious Metals Intelligence subscription with Elite Private Placements. So it's not like you're going to miss out on the videos here. You get this in addition to all the deals that we are negotiating here personally with these mining companies for the free warrants. If you would like to speak to me one-on-one, remember, no one will be paying me to say anything to you that is not what I truly think, believe, based on visible research. That is this model. So if you would like an independent consultation, sit down, chat, just blow some steam based on what you're seeing in the markets, and you want someone to provide a check to your thoughts, I am happy to help you with all of that and more. You can find out more on the Consultations tab of the website. So silver has turned negative here over the short run. That is the message on the charts. You see the next support level that will be coming up in time. You see the levels that start to flip the charts bullish again. And then when we start to see those signals, if we do, we then approach what is going to be the pathway higher. But I like to take the intermediate term one step at a time so we don't get too far ahead of ourselves, and then we go from there. Thank you for listening, guys. I really appreciate it. I am truly thankful that you've taken the time to try to understand where I'm coming from, why I can't do these videos every other day, but why I've chosen this model, because I think it's the best and because it allows me to speak freely with you when we do have the opportunities to talk. I'd rather have that than have to give a biased agenda, based on someone paying me under the table. So thank you for that. Thank you for being here. Stay healthy, and I will see you for the next update soon.